The geopolitical untangling between China and the US, which has been going on for a few years, has made huge strides in the last year. As the world moves from unrestricted globalization, focused on growth and efficiency, to a system with competing technological standards, higher costs, and more rules, technology companies from the US and their leaders must walk a narrow path. Hello, and welcome to our channel. In this video, we will explain how China's threats, conflicts, and ambitions are decelerating USA's growth instead. Stay with us until the end while we look into each and every aspect of it. Before starting our video, don't forget to smash the subscribe button and click the notification bell for more amazing content. Let's start with the video. Chapter 1. US-led price cap on Russian crude oil. Analysts say that the European Union, the Group of Seven (G7), and Australia working together to control the price of Russian crude oil could increase crude oil exports to China and other Asian countries, while making it harder to predict oil production and price changes around the world. Also, the cap of $60 per barrel, which went into effect on December 5, 2022, is likely to make China less worried about secondary sanctions and encourage the world's second-largest economy to buy more cheap energy from its northern neighbor. Some Western countries have long criticized China for giving the struggling Kremlin a lifeline by insisting on stronger energy trade with Russia. China needs to find a way to meet its energy needs, while also keeping good relations with its main export markets. Senior energy expert Wang Yangchang from the Chinese Academy of Social Sciences said, once the price cap mechanism is in place, China would be able to buy a lot of Russian oil. There's no question that lower prices are good for domestic importers. In addition, China has imposed restrictions on multinational corporations, specifically Tesla. Chapter 2. China's commitment. China has committed $1.4 trillion over the next 5 years to construct domestic strategic technologies and digital infrastructure, including 5G, smart cities, and Internet of Things manufacturing applications. Some corporations are dismantling research and development labs and other activities in China and forming partnerships to sell and distribute products developed and manufactured outside of the country in an attempt to return to the model multinationals adopted when they first sought access to China. Companies with substantial local activities are required to comply with costly restrictions. Greater China is the largest global market for electric vehicles in terms of both exports and sales. And with the opening of its Shanghai Gigafactory in 2020, Tesla's revenue in China increased by more than 120% to $6.7 billion. China now contributes more than 20% of the company's total revenue. In recent months, however, Tesla vehicles have been barred from particular districts and city streets during political rallies, allegedly due to concerns about the data collected by their cameras and sensors, despite the fact that all data is retained within the country. China is also trying to acquire one of the largest producers of OLED display driver integrated circuits to maintain its technological lead over the United States. Chapter 3. Technology and Economic War. The Chinese firm Wise Road Capital is seeking a $1.4 billion acquisition of Magnachip Semiconductor Corp., which is headquartered in South Korea and is among the market leaders for OLED display driver integrated circuits worldwide. According to reports, Magnachip does not have a substantial presence in the U.S. market, but the company is listed on the New York Stock Exchange. In recent weeks, CFI US tried to stop the transaction while it examined potential concerns to national security. In the meantime, Chinese regulators just last week approved the transaction, while South Korean regulators are still evaluating it. Notably, former President Donald Trump utilized CFI US to investigate TikTok's China-based parent company before issuing an executive order requiring the corporation to relinquish its TikTok ownership for TikTok to continue operating in the United States. While President Biden recently revoked that executive order and others issued by President Trump, the decision to block the Magnachip deal suggests that the Biden administration is using CFI US in a similar manner, and with the same or greater assertiveness as the previous administration, as an especially aggressive watchdog in the technology and economic war with China. The U.S. government is expanding collaboration with its allies in order to block Chinese acquisition of strategic technologies, especially in the telecommunications, semiconductor, and information technology industries. International regulatory clearances are a two-way street, despite the fact that the U.S. government may increasingly leverage its capacity to seal transactions in these industries with Chinese firms. The proposed $40 billion acquisition of ARM by U.S.-based NVIDIA has not yet been approved by Chinese authorities, and it is unclear when or if approval will be granted. China has a say in the acquisition of Xilinx by AMD. In this new sort of Cold War, the semiconductor sector is becoming more important than ever. Time will tell where and how this rivalry between China and the United States will end. In the near future, we will determine if China maintains its position as the world leader in the technology sector, or whether the United States will shift its business to other nations to compete with China. Until then, we must watch and wait. That was it for today's video, guys. What do you think of the whole Cold War situation between China and the US? Do let us know in the comments. If you liked the video, please hit the like button and subscribe to our channel. We will see you in the next video. Till then, take care.